Committee. Bank of America became the largest commercial bank in the nation, the 11th largest corporation in the United States, and the 23rd largest company in the world through the aggressive acquisition of other financial institutions, including the purchase of Merrill Lynch last year. But something went terribly wrong with the Merrill Lynch acquisition, nearly enough to bring Bank of America down. Taxpayers now own $45 billion in preferred shares and warrants in Bank of America. That money was committed by the Treasury Department and the Federal Reserve, and Mr. Lewis is here today as the CEO of Bank of America thanks to the commitment of those funds through a series of events that unfolded through the end of December 2008 and into early January 2009. Due to the secretive and unaccountable conduct of the Fed throughout its interventions addressing the current financial crisis, many questions about the Bank of America Merrill Lynch deal and bailout have, until today, remained unanswered. Some of the key questions have been: were the Merrill Lynch losses that precipitated Bank of America's distress call to the Treasury on December 17th the first such accelerating losses Bank of America observed at Merrill Lynch since agreeing to purchase the company? Did the government believe that Bank of America had a credible case for abandoning the deal? Did the Federal Reserve compel Bank of America to complete the deal against its will? Or did Bank of America's mistakes and miscalculations, more than any other single factor, cause the experienced corporate dealmaker to be exposed to Merrill Lynch's predictably large losses? Did the government believe that Bank of America knew or should have known about those losses before its shareholders ratified the merger? Did the government have an opinion about whether Bank of America could be liable for securities fraud, for withholding from its investors material information it possessed about a significant deterioration in Merrill Lynch's balance sheet? Did Bank of America, in effect, negotiate an extraordinary deal for billions of additional dollars from taxpayers to continue its growth as the nation's largest commercial bank? This hearing today will help to answer those questions. This committee's ongoing investigation and subsequent hearings will answer the following questions, among others. Did the Federal Reserve, in attempting to protect the system, apply well-established remedies when it engineered billions of dollars in subsidies to Bank of America to complete its deal with Merrill Lynch? Or did the Federal Reserve pursue an untested experiment in banking regulation at variance with traditional remedies in committing billions of dollars in taxpayer funds to a corporate management that the Federal Reserve believed had failed in major ways? Mr. Chairman, members of the committee, this committee has sifted through tens of thousands of pages of documents produced by Bank of America, the Department of Treasury, and the Federal Reserve. Our investigation will help set the record straight about Bank of America and Merrill Lynch. Furthermore, the story of Bank of America's merger with Merrill Lynch and its huge taxpayer-provided subsidy helps to answer broader questions about how the corporate management of very large financial institutions operate with virtual impunity for their mistakes. The documents we will reveal today provide the public a rare look into the disconnection between the Fed's ability to analyze financial problems and its ability to remedy them when they involve very large financial institutions. Finally, Mr. Chairman, before Congress rushes to revise the banking regulatory framework, we would do well to incorporate the lessons of the Bank of America Merrill Lynch episode that this committee's hearings over the coming weeks will draw. I yield back. Thank you.
Thank you to the gentleman from Ohio. Now we will yield to the ranking member, Jim Jordan, also from Ohio.
Thank you. Thank you, Mr. Chairman, for holding today's hearing. I want to thank you and the Ranking Member Issa and also the chairman of the subcommittee for his tireless efforts to get to the truth about this issue. I believe today's hearing is an important first step in learning about the full extent of the government's manipulation of the banking industry. This committee's investigation of the Bank of America Merrill Lynch transaction has raised troubling questions about potential abuses of government power. As both the chair and the ranking member have indicated, we've learned that at a minimum, then Secretary Hank Paulson threatened to remove Mr. Lewis and Bank of America's board of directors if Mr. Lewis exercised his legal option to attempt to back out of the deal to acquire Merrill Lynch. In addition, we've learned that the Department of Treasury and the Federal Reserve were involved in discussions about when and how the financial condition of Merrill Lynch was to be disclosed to the two companies' respective shareholders. We've also learned that this transaction took place in a climate of fear and intimidation by government officials. For example, we now know that in October of 2008, Mr. Paulson brought the CEOs of the largest private banks in America to the Treasury Department and demanded that they accept the partial nationalization of their banks in exchange for an amount of money of the government's choosing. Mr. Chairman, I understand the significant challenges that our economic system faced last fall. I understand Mr. Paulson and Mr. Bernanke's intention to do what they thought was in the best interest of the economic system as a whole. But in our constitutional system of government, the rule of law restricts the government's ability to do whatever it wants. We must understand the full story of what happened in the process of the government taking over much of the banking industry, so that when the next crisis occurs, we can understand the proper limits of government action in a free and civil society. I'm grateful that for Mr. Lewis's willingness to appear before the committee today. In addition to important questions regarding Bank of America's transaction with Merrill Lynch, I also hope Mr. Lewis can shed light on his personal interaction with government officials. And I intend to ask him about the participation in the initial capital about his participation in the initial capital injections, and to what extent they were forced upon Bank of America. And as someone who comes from automaking country, I also would like to know to the extent to which the government is currently involved in day-to-day operations of the company. A full and complete investigation underscores the facts surrounding the Bank of America Merrill Lynch transaction requires the government's decision-makers, in this case Mr. Paulson and Mr. Bernanke, to appear before this committee to answer the tough questions that the American people demand to be answered. And I know that the chairman and the ranking member talked about that, and we look forward to that happening in a bipartisan fashion in the near future. Again, thank you, Mr. Chairman, for this opportunity to make the opening statement. And with that, I would yield my time, if I could, to Mr. McHenry to introduce our witness.
Mr. Henry.
Thank you, Mr. Chairman. Today I have the privilege of introducing our witness, whose company is headquartered in Charlotte, North Carolina, which my district is just to the west of, and is the only member of the committee from the Carolinas. I think it's my duty and privilege to introduce our witness. Kenneth D. Lewis is currently the Chief Executive Officer of Bank of America. He's responsible for more than 55 million consumer and small business relationships and $1.7 trillion in total client assets, with various business and institutional clients in more than 150 countries and business relationships with 98% of U.S. Fortune 500 companies. Mr. Lewis oversees one of the largest financial services corporations in the world. And is one of the largest institutions headquartered in North Carolina. In fact, is the largest institution headquartered in North Carolina. Born in 1947 in Meridian, Mississippi, Mr. Lewis earned a bachelor's degree in finance from Georgia State University and a graduate of the executive program at Stanford University. Arriving at NCNB in 1969, which is Bank of America's predecessor, he served more than 30 years within the bank, and in 2001 attained his current position as CEO of Bank of America. Throughout his career with Bank of America, he secured millions of new customers and paved the way for future expansion. He was named in 2007 as one of the 100 most influential people in the world by Time magazine, has been twice named Banker of the Year by the American Bankers Association. He has been the former chairman of the National Urban League and has been involved in every possible community cause in Charlotte, large and small, and for that we do thank you for your leadership for our community. Bank of America's presence is certainly felt in western North Carolina in my district and across North Carolina generally. The 10th District has become particularly hard hit in this economic recession, and Bank of America employs about 17,000 North Carolinians, many of whom are my constituents and are proud to work for a strong institution, and we look forward to stronger days ahead. Thank you for your testimony here today, and thank you for your presence.
Thank you very much, Mr. McHenry. It's a long-standing tradition that we